What's up, everyone? All right, so in today's episode, I'm going to give you my watch list for Monday morning. Now, we're coming into the second full week for the month of November, and last week, although it was a green week, was a very small green week, and I had a couple close calls. I mean, I almost started the week deep in the red, started the month deep in the red. Now, fortunately, I was able to avoid that, but nonetheless, last week was not a big green week. So one of the things I'm always thinking about on a daily basis, a weekly basis, a monthly basis, and even an annual basis is building that cushion. So what does that look like? Well, on any given day, I sit down every morning at zero. I'm carrying no trades in from the previous day, so my P&L is zero. So really, my riskiest trade is the first trade because that's where I have the potential, if I'm wrong, to go red on the day. So that first trade really has to count. So each day, the way I think about it, and this is especially true when I'm being a little bit more defensive, like in today's market, I trade with smaller size on those first couple of trades to try to build up a little bit of a cushion on the day. If I'm able to easily build up a cushion of $5,000, $8,000, $10,000 or more, then I start to take more risk on trades 3, 4, 5, 6, 7, 8, etc. And some of those days where it's really hot, next thing you know, I'm up $45,000, $50,000, $75,000, $100,000 on the day. But on the other hand, in this current market, my first trade, I'm up like $200. That's not a cushion. The second trade, I'm down 150. The third trade, I'm up 500. The fourth trade, I'm up 700. So I'm slowly making my way up to like $2,500, but I don't have the cushion to take a lot of risk. And so I have to keep myself kind of throttled back with smaller share size. Now, a lot of people are speculating on the different reasons for this cold stretch and how long it's going to last. Here's what I'll share with you. I've been trading for long enough that I've been through more hot and cold spells and stretches than I could possibly count. And so whenever it's cold, we're always asking ourselves, how long is it going to be cold for? And is this cold stretch different from the last one? You know, is it going to be longer? Is it going to be shorter? What's the longest I've ever seen a cold stretch last for? You know, we start to feel fear. And then when it's hot, it's just going so well that you're not even thinking about it ending. You're just so thrilled to have great opportunities, great momentum, and to be making that good money. So as traders, we kind of go through these emotional ups and downs. Hot market feeling great, cold market feeling pretty lousy. What's interesting to me is that most traders come into the market when it's hot because they hear about people making money trading. They hear it on the news, you know, everything about the market sentiment, S&P 500 hitting new highs, And so they come into the market when it's hot. The problem with coming into the market when it's hot is that as a beginner trader, you're not really able to capitalize on those opportunities because you don't have the experience yet, and you may not have a strategy yet. So in fact, there's a really good argument for learning how to trade during a colder market, because if you can survive during a cold market, I mean, that's really your ultimate test of whether or not your strategy works. Can you survive a cold market? And so, you know, right now we're in a place where the market is cold. Is it because of the government shutdown? Maybe. There's some elements there where that could apply with small cap companies that are looking for FDA approvals or potentially trying to get government contracts. Those aren't going to happen right now, or they'll happen. I mean, they might, but to a lesser extent. I think that a bigger issue right now is that there's a lot of negative sentiment out there. You know, a lot of people are talking about an AI bubble. And, you know, whether or not there's truth in that, there's this sentiment that the market is overpriced, it's extended, not untrue. PE ratios are very high, and that the market is due for a correction. And certainly the government shutdown and this kind of stalemate that we're at doesn't help that. You know, the tension with tariffs doesn't help that either. But I think there's something that we have to remember. The current administration pays really close attention to the market. That's why, you know, they've called the taco trade. You know, Trump will say something and then he ends up reversing course when the market starts to drop. And so I think that that's a good thing to be aware of, because there have been other administrations that really don't pay as much attention to the overall market, for better or for worse, but just to put it out there. So what that tells me is that if the market starts to really pull back, we're likely to see intervention to try to correct that. And my guess is that the market, that the administration is going to want to see the market post by December 31st a really good year. So people are going to want, and financial advisors and big money, they're going to want to see that rally going into the end of the year. And so it wouldn't surprise me if we are seeing a pullback now and if it extends a little bit more, but if we see that rally going into the end of the year. Now, I could be wrong. It's just speculation, but that's kind of what I'm expecting. So obviously the government reopening, some resolution on tariffs, specifically with China, these are catalysts that could get the market back up. Now, if the market gets back up, what shifts? Sentiment. So now with sentiment higher, there's something else that's interesting. A lot of the small cap companies that you'll see me trading, these companies are paying very close attention to current market conditions, much more so than you might expect. They're really trying to capitalize on the publicly traded markets. And so what that means is that when we have a catalyst, let's say, or a theme in the market, and during the pandemic, there was all these themes about testing, different ways to do tests to see if people are sick and this and that. And so companies started, putting out these headlines. The most obscure company, a company that, their business name is that they work on motors or, they do solar or something. They're going into, testing. And it's because they wanted to kind of jump on the bandwagon and hope that it would boost their stock price. And so I don't know if they all use the same, kind of PR firms or how this really works, what consultants they use, but they're very dialed in with what's happening in the market. And of course they use investment bankers when they're doing secondary offerings. And so those are going to be people that are very sophisticated and understand the themes in the market. So, and of course they'll make more money, the more shares they sell. So there might be something in there. I'm not exactly sure, but what I know is that when the market is hot and there's a theme, like this summer and for a good portion of this year, it's been the crypto treasury strategy tied with a private placement. We've seen probably over 100 companies put out a headline that they're going to do it. And it was after the first couple, those stocks went up like 1,000%. So now every company's like, we've got to do that too. We want our stock to go up 1,000%, right? So when there's a theme that's working, we see these big moves and we see more companies jumping on the bandwagon. Well, what's the theme that's working right now today? Well, there kind of isn't one. We're in between themes. So I think a lot of these companies are also sitting on, just as traders are sitting on the sidelines, the company themselves are kind of sitting on the sidelines. They don't want to put out a headline, and just have it kind of go flat. So they're sort of waiting. Now, there are certain companies that put out headlines like every day, and it's like the boy that cries wolf. People stop paying attention to them. So the strategy that they're using is to wait until they see the theme and then to start peppering out those headlines that are tying in with that. So we kind of have to wait for the next theme to begin. Now, obviously, when it comes to trading biotech stocks, that's kind of our constant bread and butter, that a biotech stock with great news, maybe FDA approvals or clinical trial results, something like that, those can be such strong catalysts the stocks make huge moves. The only problem is that a lot of these biotech companies are operating at a loss. They don't make money when they're doing just R&D. And they're spending millions, sometimes tens of millions of dollars a quarter just to fund all this research. And so when they have a positive catalyst and the stock price goes up, they usually take that as an opportunity to sell more shares onto the market, to raise more money, to fund their next round of R&D. So that's a challenge with trading biotech stocks. Yes, they can make huge moves and we love it, but then they often end up coming back down. So we're in a place right now where for the last few weeks, if we jump onto the screen share, you can see my P&L. I've been kind of going, I guess you could say more or less sideways here. Obviously, I had this devastating loss back in, on October 7th or something like that. I had this really big loss, which you could see right there, $172,000 in the red. It was awful. Now, I was able to recover all of that. I got myself all the way back to whole here. So my P&L was back to whole. But during that time, the market was sort of cooling off. And now these last 2 weeks, it's been very cold. And so I've kind of been just hunkering down. I've sort of been I'm going to batten down the hatches. I don't want to take a lot of risk. This is just a time where I need to try to survive, just keep my head above water. And, this is an important component of trading. Now, Have I made money in the last 3 weeks? Yes, I've been making money, but at a much slower rate than is typical. So if my goal each day is to try to build that cushion, my goal each week is the same way. So Monday morning, trying to get a couple trades, get green, build the cushion. If I have a great day on Monday, great day on Tuesday, I start taking more risk, Wednesday, Thursday, Friday. But if I don't make a lot on Monday and I don't make a lot on Tuesday, then Wednesday I'm like, well, I can't take a lot of risk. And then Thursday, it's like, well, I don't want to screw up and end up going red on the week. And then I've only got, Friday to maybe recover. So you see how this mentality of wanting to be consistently green can lead me to either be very aggressive when things are going well or quite conservative when things are going slowly. And yet, I think that serves me really well. We look at my P&L. We look at my P&L year to date. And many of you guys, who have seen this, I'll say my results aren't typical, over $6 million year to date. But we look at my win-loss expectation, you can see sort of slower at the beginning of the year, picked up big time between May and July. August was slow. September was hot. October cooled off October cooled off partly because I had that big loss. And now November's been cool. So, we're kind of in a period like this. Now, what's important for me is to avoid having an extended period where I would just be losing. But if we step back and we just close out that year, just look at the last 10 years. This is going to be 10 years of historical data right here. So this was the beginning of my small account challenge back here when I started with $583 in my account. So obviously during that time, had to be a bit more defensive, right? Couldn't afford to take a lot of risk. So just was slowly building the account up to 100 grand, then up to 200, 300, 400, 500,000, then up to $1 million. I crossed over $1 million. And then all of a sudden we came into this period where the market was absolutely insane. So capitalized really well during that period, made about 10 million. And then it kind of cooled off a bit for a while. And then it started to pull away again. Now this is a little bit of a slower build than this sudden surge right in here. But nonetheless, this is sort of, this is me showing up every single day, every single week, every single month since 2016 when I first started using the software to measure my trades. So it's 10 years of showing up every single day. And some days, in some months, some markets, I did really, really well. In other periods, it was a little cooler. But what I've seen for other traders is making a lot of money and then losing, and losing. And then the market starts to heat back up, but they've lost confidence. And so they kind of go slow. And some people may not even be back to their highs from 2020, which is sort of a scary thing. So the strategy that I trade, I would say works well, whether the market's hot or cold, just based on, sort of the proof being in the pudding here. But I understand that for a lot of traders, trading in a colder market can feel, it can feel disheartening at times. You're like, man, I'm showing up every day. I'm not getting a lot for it. So now as we look towards, Monday morning, what is the game plan? How are we going to approach Monday? Of course, starting for me, I'm going to be defensive. This is not the time that I should be pulling out all the stops and taking big risk. I have to be more conservative. I have to protect my capital. I've got to protect the money that's in my account. So I'm going to be approaching things a bit more conservatively. Friday was a no trade day for me. Now, I guess, let's see if I import or if I look at my calendar view. So so Friday was a no trade day. I've had a couple no trade days here. I had no trade days there. I had no trade days here. And then I had a no trade day there on Friday. So this is November as we sit right now. Look, I can't complain. $18,000 isn't bad. Was green on Monday. I was a little disappointed though, because if you recall, I had peaked at a little over 20,000, 25,000, then gave back, more than half of that. Made $134 on Tuesday. Wednesday, I was red until I had this recovery later in the day, which was on that penny stock that made a big move. And then Thursday was a small green day, and then Friday was a no trade day. So, we're definitely in a slower stretch here. So going into Monday morning, my thought is I'm going to be watching the top gainer scanner, and I'm going to be approaching everything with some degree of skepticism. I'm not expecting to see big moves. I would love to, but I'm not expecting it. Now, I was surprised. we did have some big moves last week. And so we probably will get a few big moves this week. I'm sure we'll get a few. Whether or not I'll be able to time them right, I don't know. Whether or not I'll be confident enough to take big size on them, I sort of doubt, because there's no reason for me to have that confidence. So on the one hand, I would say I don't have a lot of FOMO right now. Probably most people don't have a lot of FOMO. What are we missing out? The only thing I maybe have the fear of is, that we finally get something that squeezes and I miss the whole thing. But when I see something popping up, initially I'm like, I'm not expecting too much of it. So one thing that has been serving well has been asking myself, where are we seeing the most volume and what are the leading gainers? So focusing on the top 1, 2, 3 leading gainers and sorting by volume just to see where is volume in the market. Now, if volume is on a penny stock, that's not great for me because that's not usually what I would trade well. But if it is what it is, I can't really fight it. So, BKYI had a lot of volume. BYND floats a little higher. MSGM, this one, it made this huge move after hours. Pre-market was sideways, and then it just sold off on Friday. So I was like, it's not even worth it. It's a waste. It's a waste of my energy to even try to trade this. Now, I know some people did and made some money, some lost, but it just felt like the quality was too low. Now, in a hot market, I may take B and C quality setups. And I'll do that because the overall market is so strong that even low quality setups are probably going to work well. But in a hot market, even A quality setups, not working so well. So if I'm sitting on a no trade day, do I just get desperate, bored, and say, look, I'm just going to trade a C quality setup because I'd rather take a trade than, have another no trade day? Well, what's likely to happen? C quality setup in a cold market? More likely to lose money. So for me, it is easier to sit on the sidelines given how much I'm up on the year. I understand for you, if you're a beginner trader, you don't have as much experience, you don't have as much profit under your belt, you might feel harder to sit on the sidelines. I really want to make $1,000 this week, you might be thinking to yourself. And I understand that urge, I understand that feeling, but I think rather than trading low quality setups, your time would be better spent studying some of the biggest moves from this year. And you could do that if you're a warrior, if you're a member at Warrior Trading, by watching some of the live trading archives. Go back and rewatch those live trading archives. Look at some of the biggest moves of the year and ask yourself, if that happened tomorrow and the market was heating up, how would I trade it? And really, that's the best use of your time, is studying up on these, previous big moves. Because when the market heats back up, all of a sudden it's going to, heat back up and everyone's going to be thrilled and super excited. And if you've been paying your dues these last several weeks or however long it might be, you're going to be in a better position to capitalize on it. So I would personally discourage, it's never worked for me to say, oh, I'm just going to take 3 weeks off because the market's cold and I'll come back when it's hot. Because I just feel like I'm losing the opportunity to gain experience. And even though it's cold, you can still gain experience by observing cold markets, exercising discipline, and studying during the time you might be trading. Still spending that time gaining more financial literacy, learning more about the markets, watching those archives, right? Just study, study, study. That's the best thing you can do when it's cold. So don't slack. Spend your time studying and learning as much as you can, and just recognize that the market is cyclical. Hot cycles, cold cycles. Now, sometimes we say there's a degree of seasonality to the market. It's true that summer is usually colder, and usually October, November, and December, and January, February, March are the hottest months of the year. So these 6 months are usually hot, but the cycles of hot and cold can sometimes vary from the seasonality that we expect. Case in point, this summer and this year, June was my best month of the year. I didn't expect that. That's unusual. But it was just the way it worked with the catalysts that we had, coming out this summer. So, my approach really is to try to lead the way with discipline. I don't want to overstay my welcome. I want to try to be patient. For those of you guys that are doing a 2-week trial or have, been considering it, it's not a bad time to do a 2-week trial because you can, of course, go through the classes during your trial and you can study. And I want to give you guys a good experience. I could do that either by taking a ton of trades or just by giving you market commentary and teaching and giving you that education. So that's my plan for the week, is just to, what I don't get in trades, just to make up for in commentary and giving you my feedback on what I'm seeing in the market and helping you learn a little bit more. We had a really good talk. Was it on Thursday or Friday? We had some really great conversations about the role that a lot of these companies have in taking on debt, and kind of how that creates some of the catalysts that we've seen, and the heavy extent of short selling, then the high short interest, and then the inevitable short squeezes. And so, this is the thing with trading, is there's always more to learn. Even for me, even with all my years of experience, there's more for me to learn. So that's the best thing you can do, is just show up every single day. And, that's what real traders do. We show up every day. We're in the trenches. This is, one of the funny things about trading is it's a great, for me, it's been a great career, but, it very much feels like being, self-employed. Like, it's not like, I always say you should treat trading like a business, but it's not the type of business that you're going to ascend to be able to just have people under you running it. I mean, and you're just like the CEO and you get to go like take vacations. You're basically self-employed. You've created a situation where you got to show up every single day. You got to punch the clock. You got to do your hours. But for me personally, doing it in the comfort of my own home, in a, climate controlled, air conditioned, room, I think that's great. And when I was getting into trading, because the job market was so bad during the Great Recession, this for me felt like an opportunity to potentially generate a little bit of profit, a couple $100 a day, maybe. And that was something that I couldn't get from a regular job because the market was so bad. So, and even then, I still sort of felt that I would rather take a pay cut and live life on my own terms and be my own boss than keep, working for someone else. So everyone comes to trading with kind of different perspective and different experience, but that was sort of, what really got me into it as a full-time trader. So that's it for me. And look, I'll be back at it. I'll be streaming bright and early tomorrow morning, 7 a.m. And hey, we might be patient and waiting. Maybe we'll see something with great news at 7:30 or 8. I will say that there has been a pattern. The last 2 Mondays have been the best days of the week. So, I mean, it's not a guarantee that tomorrow is going to be the best day of the week, but the last couple weeks we did really well on Mondays. So that's something I'm paying attention to. And, if I can build my cushion and start to kind of get in the driver's seat, then I might have a chance to step up to the plate a little bit tomorrow morning. So all it takes is one. And my goal, I suppose, whether it's hot or cold, is only to take trades where I really genuinely think I have the potential to make money. And so right now I'm being a little pickier. I'm trading a little bit less. But when I'm taking a trade, it's because I think I really like something. So anyways, that's it for me. Thank you guys as always for tuning in. I hope you've hit the thumbs up. I hope you are subscribed to the channel. And let me remind you as always that trading is risky. My results aren't typical. So manage your risk, take it slow, and always practice in a simulator before putting real money on the line. All right, so with that, I'll see you bright and early on Monday morning.